It out from Pirojsha Godrej, the executive chairman at Godrej Properties, and how realtors can really cope with the pandemic fallout. Abha began by asking him if the demand is showing signs of revival.
The sector was actually, unfortunately, in a crisis even before this new crisis. So it's certainly been a double whammy, I think, for the overall real estate sector. I think you had a lot of companies going into this with fairly weak balance sheets, a lot of existing liquidity concerns, existing challenges in attracting customers. So certainly this current situation is going to compound that pain and make things more difficult. At the same time, I don't think it's all doom and gloom. There is a very challenging period. I do think individual developers who are not in a good position might struggle to survive it. But as a sector as a whole, I do believe things will start to do well. And the reason for that is that, there are many reasons to be optimistic, including that affordability of real estate is actually now the best it's been in 20 years, with interest rates at decadal lows, with property prices having now been flat for 6-7 years, in some markets having even declined over that period, and people's income having gone up. Now, of course, that sounds a little bit counterintuitive when we're in the middle of this pandemic, when everybody's very worried about job losses that have already happened or ones that may be slated to happen down the road, or salary cuts that could happen. But I do think that, once this situation stabilizes, we'll be in a fairly positive position with affordability looking the best it has. And actually with customers who are quite interested in buying real estate. So, all the data we've seen has shown that the situation we're in has made people more interested in buying homes rather than less. Because I think, having, of course, been locked in our homes for this period, everybody sort of sees the importance of that, and also is seeking the kind of security that home ownership offers.
Absolutely. I think we've been seeing that trend gathering momentum as well. You touched upon interest rates. Today we also saw, the stamp duty cut coming in, which was much awaited. Still perhaps waiting to see something on the ready reckoner rate as well. Do you feel some of these moves will also help to boost demand going forward? Are developers looking at offering further SOPs, over the next 6 months or so?
I think these are, hugely important moves. I think the step the Maharashtra government announced yesterday in terms of cutting stamp duty by 3% was an excellent step and actually very intelligently designed, because if you look at the way they did it, they didn't just cut it and say that it would stay at this level for an undefined period. They quite clearly said that it would be at this level till December and then would go up a little bit till March and then would lapse thereafter. And the reason that's actually much better for the sector than just cutting it without a time frame is that this will actually push fence-sitting home buyers into actually making the purchase decision. So I'd like to compliment the government on the way that this was designed. I think it would be extremely beneficial if other state governments followed suit. Of course, it's too early to say whether this will have the impact it's intended to have. But certainly, I think what we're seeing is that there are a large number of people out there who want to buy homes and whose actual interest in buying homes has gone up further in the last few months. And what has been missing is an incentive or a reason to act quickly, because everybody's a little bit worried about how the economy is going to play out. Everybody thinks they might get a better deal down the road. So I think this kind of an incentive to make a decision and make it in a defined time frame is actually very well thought through. In our own experience, we've actually seen that, again, customers are interested in buying homes. We, in the first quarter of the financial year, when the lockdown was at its most severe, when people's fears were at their most severe, we launched some payment plans which allowed customers to make more back-ended payments. And those were actually very well received. Customers, flocked to the scheme. We saw our sales for Q1 actually increased by about 70% year on year. I think we sold well over 2,000 homes during the quarter. And frankly, we wouldn't have expected that in April. But I think it indicates that if customers feel that they are getting attractive terms or getting an incentive to act quickly, they are willing to do so. So I'm quite hopeful that this stamp duty action taken by the Maharashtra government will, in fact, benefit the sector. And I think, again, it was a very intelligently designed move.
Wonderful. And we did see that sentiment play out even in terms of the response when it came to stock markets and share prices post that announcement as well. Pirojsha, you've always consistently said you're doing what it takes to really continue to build your market share. And you just touched upon the kind of numbers that you're looking at in sales. Has this period offered you a further opportunity to really consolidate your position, given that homeowners or prospective homeowners are looking at this time for the more trusted brands?
Yes, Abha, I'd put it in two ways. One, I think there's no question the situation, both the current COVID pandemic, but also the overall weakness in the sector going into this, has made absolute sales more challenging for everyone in the sector, including us. So I think our numbers would be even higher were market conditions favorable. But I think there's no question that on a relative basis, which market share would indicate, this has advantaged the stronger developers with strong brand names, because in any case, I think customers for under construction real estate over the last few years have seen a lot of different things go wrong when buying homes, huge delays, in certain cases, developers going bankrupt before being able to deliver the home. So I think there was already a significant amount of conservatism coming into the buyer's mind on which set of developers they want to work with. And obviously, I think a situation like COVID, which has put many businesses under financial strain, and has clearly, I think, clarified to customers the even greater importance of only working with developers whose financial stability they are confident in. So there's no question that I think the leading players, including Godrej Properties, will significantly benefit from a consolidation perspective. That consolidation's already been playing out over the last 5 or 7 years quite significantly, but I do think this situation will ensure that process gathers further momentum.
Sure. You did face, as everyone did, challenges, in the beginning when the lockdown first hit with regards to construction, which put a spanner in the works in terms of completing things on time. As labor comes back to work, how are things looking now on ground?
So I think, it's been quite positive, the change. We actually were quite concerned in the first quarter, because what we saw was actually that we managed to retain well over 60% of the labor on our side through the actual lockdown. And, we're able to, of course, make sure they stayed as comfortably as possible during that. But what happened after that was that everybody wanted to return to their homes to see their family, I think, after an event like this. So we saw that 60% number go down to below 30%. And that's been steadily coming up since June. And the most recent number is now north of 70%. So I think we're in a reasonably healthy zone. I think in another 3 or 4 months, we should certainly cross the pre-COVID labor strength. I think that said that, there will be a setback to construction schedules, particularly for the current financial year. So what's happened is that Q1 was almost a total write-off with, over 2 months of actual completely shut down sites. And since then, it's been gradually ramping up. But I would estimate at this stage, assuming we don't have any secondary major lockdowns and second waves and so on, that we've probably lost about 6 months in terms of construction schedule, which honestly is not the end of the world from an overall project schedule, where we usually would have, a 3-year or so schedule. You can make up a lot of that in terms of commitments to customers. We usually have a buffer that is larger than 6 months, so we're quite hopeful that this should not impact delivery timelines to customers. But what it certainly will impact is kind of reported numbers for the financial year, because all of the accounting in real estate happens on a project completion basis. So the plans for that we would have had at the beginning of the year in terms of the projects we intended to complete during the financial year, because we've lost sort of at least half of the financial year in terms of construction timelines, I think there will be a significant hit to both reported earnings and operating cash flows. But again, I think I see that as more of a temporary effect than something that we can make up in the next year.